right, good afternoon and welcome everyone. I just wanted to say thank you so much for taking the time out of your day to join us. We have a lot of useful information and material lined up for today's webinar, so let's go ahead and get started right away. Next slide. Before we dive in, just a quick couple housekeeping notes. Everyone is muted upon entry to help keep the audio clean. However, if anything does come up, please drop your questions into the Q&A panel. We'll also have some polls coming your way. We'll cover everything at the end of the session, so don't worry, we'll get to your questions. Next. For anyone I haven't met yet, my name is Nicholas Cabrera. I'm a customer success manager here at Crestwood Associates. Crestwood has been supporting Dynamics GP, Business Central, Acumatica, and the broader Microsoft ecosystem for over 20 years. We work closely with organizations that are evaluating what's next, improving their current systems, or planning a migration. Today's goal is to give you clarity, what's happening in the ERP landscape, how the tools are evolving, and what those changes mean for teams that rely on GP and related systems, especially when it comes to 1099 for the rest of the year. Next, please. Now, before we move into the technical content with Avalara, here's a quick look at the values that guide how we work at Crestwood. Our three core tenets are working smart by being transparent and doing things the right way, having fun by staying curious and collaborative, and delivering results with precision so projects move forward cleanly. These are the principles behind how we work with our clients, how we work with our partners like Avalara, and how we approach sessions and webinars just like this one. Next. This is the full technology stack that we work with every day. Business Central, Dynamics 365, Copilot and AI agents, Acumatica, Microsoft's Power Platform, and of course, Azure. Most GP organizations eventually touch at least one of these as their needs grow. The point isn't that you need everything shown here, it's that the ecosystem has matured. Integrations are cleaner, and there are more options than ever to modernize without disruption. Our job is to help understand what fits, what doesn't, and how to build a path that makes sense for your team. Next. With that foundation in place, let's shift to today's main topic, how to beat the challenges of 1099 and W-9 compliance. This is especially important as year-end approaches, and Avalara has put together guidance that simplifies the entire process. With that, I'll hand things over to the Avalara team to walk us through the best practices and tools available. Thank you so much.
Hey, thank you for that introduction, Nick, and welcome everyone. It's a pleasure to be here. My name is John Harrington, and I'm your contact here at Avalara. Today, we're going to talk about the 1099 and W-9 compliance process and the challenges that each of those bring. Quick disclaimer, we're really here to talk about the topic. Unfortunately, Avalara cannot provide legal tax advice. So really, we can answer questions towards the end, but our goal here is just to give you some oversight and overview, but this is not really to be deemed legal tax advice. I've been with Avalara now for just over 2 years. I've done sales and use tax work for almost 30 years. And I'm joined by my colleague, Gordon Walsh, who is our 1099 product solution consultant. And Gordon, if you could introduce yourself, that'd be great. And let's see if he can we hear him okay? Okay. All right. Unfortunately, Gordon's here with us, but we do not have his audio working. So I'm going to continue to go through the PowerPoint, and he'll be here towards the end for Q&A. So let's continue the presentation. This is a quick agenda of what we're going to talk about. We're going to talk a little bit about the workflow of the 1099 compliance process, W-9 collection, federal, state, and individual requirements. We'll talk a little bit about the One Big Beautiful Bill Act and how that impacts the 1099 process. We do have a checklist, and towards the end, we'll talk a little bit about some of the Avalara solutions, and most importantly, we'll have a Q&A session at the end of our session today. So really talking about the workflow of 1099 compliance. You know, really, it's a mixed process of getting 1099s completed and mailed to your vendors. You have to first figure out if a vendor meets the creation requirement. And then from there, you also need to figure out if they need to file, in addition to the IRS, is there a state requirement that's needed? You have to kind of copy and paste the data from the W-9 over to the 1099 form, or from the W-8 to the 1042 form. Then you have to file the form either with both the IRS and the state, or just the IRS. And then from there, you have to print and mail the form to your vendors, typically by the 31st of January, depending on the form. There might be other due dates. And you know, then you have to kind of wait and see if you're going to receive a B notice from the IRS and make any corrections necessary. You really, in most environments, it's a manual process where you have to manually request the W-9 or the W-8 from your vendor to make sure the information is complete and accurate. And then you have to create an account on the IRS to check and validate the tax identification number. From there, you might request a new form from the vendor. If you catch any errors, then you have to store the form in central and secure location, and then the process kind of starts all over again. So it's a pretty complicated 1099 compliance process. And truly, the compliance process begins with the collection of the W-9 from your vendor. And we're going to pause for our first poll. This is our first poll question for the group, and that is approximately how many W-9s, W-8s, and W-4s do you have on file? And we'll give everyone a moment to populate that.
John, I think I'm here with you now.
Oh, awesome. Very good. Okay. Welcome.
My apologies. I don't know what happened with the technology there, but I'm here to work with you now.
Oh, I appreciate that. And if you want to go ahead and maybe quickly introduce yourself, you bring a lot to the table. So I'd love for the group to hear about your history and you know, your 1099 experience.
Absolutely. Well, good morning, good afternoon, I guess, depending on where you are. I'm Gordon Walsh. I am known as the 1099 guy at Avalara. I help to lead our 1099 and W-9 product group, and I have an extensive background in the world of global vendor and contractor process management consulting. So all I do every day is talk about 1099s and W-9s, even though it's not January. This is my only niche area of expertise. It's what I do. So happy to be here and working with you today, John.
Excellent. So do we see the results of the poll, or I can't see those on my end? Do you guys see them? Let's see.
I'm seeing them in the chat. It looks like the majority of our group is in the 100 to 999 space. We have a couple over that and some below it, kind of all over.
Okay. Good. So I'm going to go ahead and close out the poll, and then Gordon, if you want to take over from here, I'm happy to just be your point contact here on the PowerPoint. So I'll go ahead and move on to the next slide.
Yeah, absolutely. So as we talk about this, and John kind of outlined the problems and the extra steps that come along with 1099 compliance. And that it really, all of this compliance, it begins with the W-9, that's the first few steps of doing a 1099 well, is what are we doing related to W-9? So I think it makes sense to start by talking about the relationship between W-9s and 1099s, and what does that look like historically, because there's a bit of a gap, a bridge to cross in this world. So John, if you want to click on to our first example here, that, first of all, it has to do with timing. W-9s are something that we collect at the point of onboarding, which could be January, but it could be any month of the year, really any day. Whereas 1099 is something that is very seasonal to the month of January, right? It is something that we do only in January. So because those happen at different times, that creates a bit of a separation in our mind as we move forward, right? Next, it's also something that because of that timing difference, we also see it a little bit as a functional difference, right? W-9 is something that is done at the onboarding point, procurement, whereas 1099s are something that are done related to tax, which typically then becomes an accounting function. So we see them functionally different, procurement and accounting, which means then we start boxing them in these processes that are separate. It means that we might use different softwares. And for a lot of businesses, it means that we might even go as far as different departments within the business handle these two different functions. Again, creating more separation between W-9s and 1099s. Also, bear in mind that for a lot of our vendor and vendors and contractors, whatever these 1099s are, these non-employees, those relationships are, they can be very one-off, very transactional. You might only work with them once or a few times, and so it's not like your employee where you're paying them, seeing them daily or often and paying them on a pretty regular cycle. This is something where it can be very one-off or transactional, so it's hard to always want to build an ongoing formal process. And I think these last two are very, very interesting. First, the idea of the tool, right? I work with my hands. I build with my hands. My shelving you can see behind my office, I built with my own hands. And any good woodworker knows that if you want a good result, you need the right tools. And so, when we talk about tools, that's one of the biggest gaps is our legacy accounting systems have always, been around bookkeeping. They're meant to keep track of the payments, the transactions, but not necessarily built specifically to help with vendor onboarding. And so because of that, again, it's maybe a lack of the right tools. And then because we don't have the tool, we have to build process off of what we've got, do the best we can. And now that process means separation. Right? So having the right tools is really important. And then the last one, I think this last one is really interesting. The IRS mandates that we have to collect W-9s, right? We are required to collect W-9s from every non-employee we make payment or compensate in any way. And then we are required to file accurate 1099s for those who qualify. But they don't mandate how. They don't tell us how we have to collect W-9s, how we have to file 1099s, just that we've got to do it. And so not having that how, that creates this freedom of choice that then potentially means, well, we do things in different ways. And are those ways compliant if you're not telling us how? That creates a potential issue, right? So, not to blame the IRS, but it is a gray area, and that creates an interesting relationship. So if we move on to our next slide, it really then becomes, well, what happens if I don't do these things right? If I don't connect those dots, what are the problems? Well, first, this is tricky. If we don't have the right records with the right information on it, how do we file a 1099, right? The only documentation of what a business's tax classification is that would determine whether they receive a 1099 or not is a W-9. So if we don't have W-9s for everybody and we don't have them accurate and correct, well, now we don't know who should get a 1099. We may be filing 1099s we don't need to be. We might be missing 1099s. And we might be filing incorrect 1099s, which again, connect all these dots, go towards after filing season. The IRS only knows you. If they don't know who that vendor is, they're coming back to you, and now you play middleman. You deal with the problems. So having this right in the first place means you get to preemptively stop a ton of the risk and the problems that come from it. What about not having kind of a central and standardized system to collect and to manage these, right? Maybe we work with some smaller mom and pop type shops and vendors and things. Well, I collect a W-9 from person one, and then I collected somehow another W-9 comes in from that same company, but maybe it's got different data on it. Did I accidentally create two records and I'm going to issue two 1099s for the same stuff? Do I know which one is right? Which one do I go with? Do we have that system in place? Because if we don't, we start accidentally creating extras, or we don't create enough, or we create, again, 1099s with wrong data on it. And if you don't, if you could take one thing away, John and I would both preach, make sure you collect a W-9 from everyone you work with. It doesn't matter if you think they're a C Corp or not, because they're a giant company. The IRS is going to tell you, have a W-9 for every one of these individuals or companies, even if it doesn't mean a 1099. It is a small step to ensuring your compliance, right? So always make sure you collect that W-9 from everybody, and if you can, do it before you ever make payment. And that way you reduce your risk of incorrect, wrong, or over filed forms. And I think I speak for everyone who has ever been a part of an IRS audit, whether it was in your business or you had your hands in it. I have personally been a part of hundreds of audits that I've helped with across non-employee compliance. And I think we all agree the number one thing you can do to help yourself in an IRS audit: receipts, receipts, receipts. The paper trail is how you prove your innocence. It is what makes the IRS happiest. It's what clears up the problems as fast as possible. So making sure that you've got that W-9 audit trail is key. And then this, again, we saved the most, I think, interesting one for last. This all gets shoved into a very small window, right? Obviously, 1099 is always going to be an interesting time because we have to do it all in January. We don't know the totals of what we're going to report on a 1099 until after the year has ended, but we have to file all this in the month of January. And so if we don't have W-9s in order already, well, most common what ends up happening is we scramble in this busy time of year, and it's busy personally too, right? There's a ton of holidays in November, December, and January. There's New Year's resolutions. There's the end of a fiscal, start of a fiscal, or end of the calendar, start of the calendar. There's so many different moving pieces. And so, if we wait to look into this and say, okay, we paid these individuals or these vendors and we don't have a tax ID number. We never collected W-9. We just base it off their invoice. Now we go scrambling after this, and we're in a mad dash to say, hey, I need a W-9. And then if it doesn't match or it's not completely filled out, we're going back to them. And that creates stress for you, but also kind of the undue potential damage to a relationship, to the stress to the relationship with that vendor to try to get this all figured out, because they're going through the same things you are. And so this is one of those, don't wait to brush your teeth until right before you go to the dentist. No, instead, we brush our teeth every day throughout the year. And that way, when we go to the dentist, we're in and out. It's easy, right? And so that's the same concept here is having proper attention to W-9 collection year round means we don't have to scramble and try to clean up right before the big event, right? So this comes back to what we said before. If you want to make sure your 1099 compliance is taken and done well, the solution is automation. It's having a tool to be able to do this, and it's taking it and doing it year round. And so some important things to consider: real-time W-9 collection. Make sure you collect a W-9 right away, right at the start of a relationship. Don't pay them. Wait to pay them until you have a W-9. And take it a step beyond that, TIN match. TIN match right then at the beginning of the relationship. If you TIN match when you onboard before you make payment, now you've removed a liability for you to potentially pay the taxes on that compensation. And then connect everything, right? This is all automation. Avalara, obviously, John and I work with the product that does real-time W-9 collection. The product then TIN matches live with a vendor in that tool. And then we have APIs. So be able to connect the dots between W-9 collection, vendor creation in an ERP, and 1099 filing at year end. All these tools will make your processes cleaner and easier and you more compliant. So we said it starts, good 1099 compliance starts with W-9, which we just talked through and the importance of, but it actually then ends with the three parts that are the IRS, what do we do federally, what do we have to keep track of, the states, what do we do on a state level, and then those darn vendors, right? They're the ones who are always calling and saying, hey, I didn't get my 1099, or they don't tell us when they make changes, and you know, we have to get that copy to them because they're the ones responsible to tax. So 3 more things to take into consideration that really round out 1099 compliance.
Excellent. Thank you, Gordon. So we're going to go into our second poll question for today, and I'm going to ask the group to read this and answer this. So how many hours does your company typically spend in January focused solely on 1099 compliance with the IRS? We'll give everyone a second or two to answer that.
This one's always interesting, John. You hope for a small number, but you never know what's going to end up happening and what kind of processes people have in place.
So this one is actually pretty interesting for the group. About 71% of the participants are showing 10 to 50 hours.
Okay. Well, that's good.
Pretty,
it always breaks my heart a little bit if I see, 50 plus hours or more. But again, I think this is always something where good process and the right tools, regardless of whether you take 2 hours, you take 20 hours, or you take 1 hour, there's usually a place to improve and to reduce that time, so that you can be focused on the other things in life that matter.
Yeah, sure. So we're going to go ahead and move forward. That was the second poll question. Now we'll talk a little bit more about the ongoing changes of 1099, W-9.
Yeah. So again, we talked all about W-9, but on this 1099 side, let's start with that federal side of things, that there are always moving targets. It is so hard just to keep up with all of the changes that happen from a federal level and, what it is we need to keep track of. And we have several examples. If you've been doing 1099s since 2020 or before, then the great debacle that was 2020 with the reintroduction of the MISC. Remember the good old days when we could just put everything on a miscellaneous? You get a miscellaneous, and you get a miscellaneous, and you get a miscellaneous. But then the MISC. So I'm sure there are people on this call have some horror stories or complications that came that year, but that was no easy task, and there wasn't a ton of guidance on what to do. This is a more recent one. In 23, we had the new rule with e-filing, where if you had 10 or more information returns, so W-2s, 1099s, 1042s, all those end-of-year information returns, if you had filed 10 or more, you now had to file electronically. Obviously, if you're somebody who's been filing, a lot of forms for a long time, well, this didn't phase you, but we did have a whole lot of new electronic filers that were used to doing this by mail and had to transition and had to learn all about, fire system or find a third party to help them. This was wild. This was quite a change. And again, not a ton of guidance. Wasn't like it was easy to just go out and get a TCC code and file directly to fire on your own. We have a new form this year, the 1099 DA, the digital assets. So anybody trading Bitcoin, crypto, NFTs, any of those digital assets, every single transaction there is going to have a 1099 DA reported for it. It's all like a 1099B for your brokerage trades or a W2G for gambling winnings. You have to have one for every one of these. And so that's a huge one. That's going to be debuting here this year. For the tax year 25, and that has the potential to have millions or billions of new forms filed for that one. And so there's a lot to keep up with. And then the 1099K, your third-party processors, the reduction of that threshold from $20,000 in 200 transactions was then dropped down to no transactions and $5,000. Then it was supposed to drop down to $2,500 this year and $600 next year. Oof. But, there's been some recent legislation, if you pay attention to the news, and that has drastically affected that. So I'll tell you more about that to be continued here in a little bit. But there's a lot of moving targets, right? And every year there are new ones that are affecting us from a federal level and our ability to know what to do to file.
And then that whole concept carries forward if we start talking about the states.
Yeah. And it doesn't get easier because there's not just one state, there's 50 plus the District of Columbia, whereas there's only one IRS, right? And so, we have all these states to keep track of, and every state has its own rules, its own thresholds, its own filing dates, and we have to keep track of all of them. So, John, you can click the next, I think, 2 just to show some examples here. We have North Carolina, we have Delaware, we have New Jersey. Just some examples of some of the extras, depending on whether you have withholding or not, changes the filing dates, or which type of form changes filing dates comparatively to federal, or extra forms like the NC3 that you may have to file in a state. But you have to keep track of this. And it comes back to, where is the work being done? Where is your headquarters? And where's the address on the W-9 of the non-employee you made payment to? All of those factors matter. And then we have to go and say, well, which states do I have a reporting need in, and what is it? What do I need to do, right? And then above and beyond that, we have the complications of the combined federal state filing program. So if you're unfamiliar, in the world of 1099, we lovingly call that program CFS. CFS, and that is the program where when you file with the IRS, it automatically files to the state for you. Meant to both be helpful to the IRS and the states and to filers, but not every state participates. Only some of them do. So which ones do and which ones don't? Then on top of that, some states participate in CFS, but they also then have specific requirements for you to go and file in their state above and beyond CFS. Some of them, it only matters to certain forms, or if you hit certain thresholds, or if you have withholding in that state. So again, CFS versus non-CFS, CFS, but also non-CFS. And then, what are those applications? And then you have all the states that aren't CFS that we may have to do something with. And then there's states, Texas or Alaska, no income tax, don't have to do any filing. So this is a lot to keep track of. And it's not always easy to go to those Department of Treasury state websites and figure out what you're supposed to do and where you're supposed to go. So again, federally, but now we also have all the states to keep track of. And on top of that, we've got to keep these vendors happy too, right? Whether we like it or not, these vendors, these contractors, these sellers, these ambassadors, these techs, whatever they are, these non-employees are, they're important to the success of the business. And so, no, they're not employees, but we still have to keep up with this stuff. And we do have a legal obligation at some level to do that, right? To mail out or deliver the copy of the 1099 so that they can go ahead and take care of the taxes on this, right? But it's all the little things that they aren't always doing well for us, right? Maybe they change their residence, right? We should add a poll question on that. What is the number one way you find out one of your non-employees moved? I bet it's not that they proactively let you know. It's probably that you got a return to sender piece of mail from them, right? You tried to mail that 1099, you got it back in the mail a month later, and now we know. Well, they moved and they didn't tell us, right? Or maybe they changed their legal name, they reincorporated, and they don't tell us. Well, again, we may have issued a 1099 to the wrong entity or in the wrong name. Or maybe we missed a 1099 because if they were a sole prop and then they incorporated partway through the year and they hit thresholds, we may have to issue a 1099 to both of their entities for that year. That's tricky. Bad handwriting. Ironic that a freelance writer has bad handwriting, but can you read the W-9? Do you know what they're saying? Did they even know they need a W-9, or are they international and they even know how to fill this, their paperwork out? So it's having copies of all these in a process and using a tool that lets you know, hey, do I need to file a 1099 for them? And above and beyond, can I make my life easier? The IRS now allows us to electronically deliver a 1099. So you don't have to put it in the mail in January anymore. You're allowed to email it or make it available electronically, but you do have to gain consent from that recipient first. And do you know which ones have consented? Do you have consent? And do you have the means in which to be able to deliver those in a more cost-effective or easier way in your world, right? So a lot of considerations in this part of the process as well. So the problem is, right, is if you do everything right, there is no award, is there? You don't get a medal or a trophy, a ribbon, a high five or a hug. You'd love it if they wrote you a check, but they don't do that either, right? However, if you misstep in any one of those areas in any way, well, that's a liability, and not knowing is also a liability. Saying I didn't know any better, the IRS has that very unfavorable term that they apply a lot of times called intentional disregard, where they say you should have known, but you didn't do it anyways, and now the fines go up exponentially. And it doesn't feel good, and it doesn't help your your wallet at the end of the day either. So making sure that you know these rules, or rather that you don't have to know, because the tools and the process keep you in compliance automatically. So this is something, again, Avalara does, having that tool in place. Making sure that all the federal rules are automatically applied, classifications for 1099 filings are automated at the state level, that every state's rules, thresholds, dates are pre-programmed and automated for filing for you, and that the individual is taken care of, given an easy experience to be able to access their 1099, opt in or opt out of electronic delivery, and a tool that makes it very, very easy for you to automate those redeliveries, right? All those calls that happen in the non-January months that are, hey, I need another copy. Hey, I lost a copy. Hey, where did that go? And being able to very easily and simply automate the redelivery of those things, right? So again, automated solutions, having the right tool helps build the right process, which then keeps you in compliance. I think that's it. I mean, that's the end of it, right? We covered everything. I think we're pretty much done, right? There's nothing else. Oh wait, no. I think that there is. I think there is some stuff that's happened more recently that we should talk about. That one big beautiful bill. That's the elephant in the room, and there are 3 things that we're going to talk to you about here today that directly do come from the one big beautiful bill that affect the world of information returns. The first one is that this is the final year, the retirement of the FIRE system, that for decades has been how you are e-filing. All businesses e-file their 1099s direct to the IRS. That system is being sunset. It is going away after this filing season, and it will be usurped, right? Taken over by its younger sibling, IRIS. So there's some implications to that we'll talk about. The next one probably more than likely doesn't affect everybody or any business here. It is the introduction of the 1098 VLI, a new form for reporting vehicle loan interest. Unless you own a business or participate in a business that does service or offer vehicle loans, this won't matter to you from a business standpoint. But if you do own a vehicle and you purchase it on a loan, you may be getting a 1099 VLI going forward starting next year. And the last one, this one is definitely the biggest one. It affects probably everybody on this call. There are new thresholds, some immediately impacting us and some not till next year, for the 1099K, the 1099 miscellaneous, and the 1099 NEC. So John, let's click into the next screen and we'll talk about each of these individually.
Sure.
The FIRE system's going away. And unless if you file directly with through the FIRE system, well, this matters to you because you will no longer be able to file through FIRE. You will not be able to use your TCC codes to transmit your files anymore. You will need new codes and new systems. The old system, IRIS, now is replacing that, and it is XML based architecture. It has some new requirements for testing. And so if you do this yourself, get going ASAP. I think the deadline has already passed to be able to file direct to Fire or direct to Iris this year. They cannot process your request for a TCC code for Iris for this year any longer. So you'll need to keep up with that. If you use a third party like Avalara, obviously we'll keep up with this for you, but there are some ripple effects that we don't mention here, but that could matter going forward. Things like Fire has always, you submit line one, the name line for Fire is one box. First and last name, business name, it's all in one box. Iris is moving to two boxes. And it doesn't sound like a very big deal, but keep in mind the W-9, one box. Current 1099, one box. Who decides, right? If I get a W-9 and somebody's name is on there, do I get to decide which one goes in the first name box, goes in which box? What if they have a multi-part last name or a multi-part name? Very common in the North and South and Central America. Maybe I'm who's to decide that, right? And then also look at your ERP, look at your software where the data usually comes from, where you store vendor data. Is that a one box or a two box system? Right? So there's how data gets transferred and what forms look like going forward and how do we decide these things. There's potential ripple effects that we haven't even felt yet that could come from this move to Iris starting next year. So something to keep attuned to and partner with great organizations like Avalara and Crestwood to make sure that you are up to date on whatever does come from things like this. Again, we quickly reference this and don't need to take a ton of time. Again, if you service vehicle loans, you will need to start issuing 1098 VLIs starting next year for tax year 26. But if you do own a vehicle and you purchased it using a loan, you may start getting a 1098 VLI starting next year, just like you get a 1098 for owning a home for a mortgage statement. This may be a new form that will play a part in your taxes. So just something to keep in mind as we go. And then the last one is our 1099K, 1099 NEC, 1099 miscellaneous threshold. So the 1099K was on a multi-year reduction down from $20,000 and 200 transactions down to $600 and no transactions, but that has been repealed with immediate effect. So right now, this year, 2025, we are back to $20,000 and 200 transactions. So if you have anything to do with 1099Ks, you are filing those as a marketplace or third-party payment processor, you need to go back to $20,000 and 200 transactions for this filing year of 2025. The 1099 NEC and the miscellaneous are for the first time in decades moving on up. The threshold will be moving from $600 to $2,000. That is not happening this year. That is for tax year 2026. So this year still 600, next year 2,000. And it's not just stopping there. It will also have has been written so that it can be adjusted for inflation. So every potential year starting in 2027 and going forward, that $2,000 number may go up based on inflation, a lot like we see with Social Security caps right now. Just something to think about as you go forward, that you may have less forms to file next year, but what does it mean for you in terms of automation, keeping track of these thresholds and what the impact will be to you?
So thank you, Gordon. So we're going to move into our third poll question. This is actually our final poll question for today, but if you would take a second, have you begun planning for the transition from the fire system to the IRIS system? Mandatory, as Gordon shared, by 2027. Let's just give everyone a second to answer this. So I don't know, Gordon, if you want to speak to the results. Is that what you have seen typically when you do these webinars, or?
Yeah, it's across the board, right? Not necessarily sure what the plan is. Some people have already made a plan. Usually, I think it has to do with volume as well, right? The larger the number of 1099s you factor in, or the number of the importance to your overall business. If your non-employees make up a large amount of your revenue, it would make sense you've started to think through this more so and made plans. But yeah, I would say, not knowing necessarily what the plan is yet, or just kind of being unaware of it at this time is pretty common. Again, it's just something not necessarily that you have to have figured out. If you did use Fire always in the past, then I would definitely start thinking about this now. Otherwise, if you're using a third party, you're probably safe to continue to use a third party, and they should be able to handle it.
Sure. Well, all right. So I think we're towards the end of our session here, but I'll let Gordon kind of kick off this last section.
Yeah. So how do we sum this all up? How do we sum up that end-to-end solution for 1099 compliance? Well, it's really about, as we said, there's a price. If you don't, it is a trade-off of, if you don't have the right tools and a process built around a tool that automates all this, well, then it's up to you to keep track of every change, every new law or legislative change, and anything that is going to affect who has to file, how many to file, and what is included. And so the reality is, this is a multi-step ongoing process that never really seems to end. It is a January high level insight there, but the compliance is a year-round thing. So what does it look like, and how can it be better? John, if you want to click one more, it's really about utilizing the right tools. Actually, if you want to click a couple more times, I think 3 probably does it. Where, again, utilizing a tool like Avalara, we can help from the moment you meet a vendor to collect a W-9 in real time, automatically validating their tax ID number in the background with them, collecting consent to e-deliver to minimize the physical mail and the pain that creates, being able to store and meet all security protocols, giving you a great tool to be able to manage all of these people and know when changes occur, and then transitioning that to filing season, where we can e-file with the IRS, e-file with all of the states, TIN match, address verify, electronically deliver or physically deliver all the forms, and give you complete feedback on all of those statuses and elements so that you can keep track and keep up and have a process that is easier for you and takes less time and creates less stress in your life on a year-round basis. We've even taken it a step further, and this year we have released open APIs so that you can integrate our Avalara W-9 1099 tool into your ERP, into your other systems, so that honestly, you don't ever have to log into Avalara if you don't want to. All of the data points and status updates and functional uses can be completely controlled outside of the system using APIs. It also means you never have to go direct to the IRS because, again, we do all of it for you. So imagine a world where you can onboard, collect a W-9 automatically, have that push into your ERP, create the vendor record with TIN match, move to making that payment in your ERP, and then click a button to push all of that transaction level data straight onto 1099s, file and get the acceptance or rejections, the updates on delivery of the form, all from one system, one place, because of APIs automating this, connecting all of the dots.
And then talking about the connectors, Gordon, I don't know if you want to just talk about our pre-built connectors as well.
We've got, the APIs are there to be developed. They are something that are there, but you do need to understand a little bit of how APIs work and be able to put them in place. Whereas we've pre-built a number of connectors that are just double click to go. No real IT work involved from some of the great softwares you see on screen, but also to include Microsoft. We will be releasing a pre-built connector for Microsoft Great Plains, Business Central, and Finance, all to make their debut here in a very, very short amount of time to be used for this filing season. Again, meaning if you've been marking your vendors as eligible and keeping track of the transactions, just by connecting your ERP login direct to Avalara, we can, in a matter of minutes, pull all of that data straight onto 1099s and sort it out so that you're ready to file.
Excellent.
I think we've, if you have a screenshot or a snippet tool, this is a great time to use it. We've got a checklist here for the tax year of 2025. And this just gives you a level of a whole bunch of dates, best practice timelines to get things done. You'll notice there are asterisks all over the place, and those are there for if you are a client of Avalara, if you're using Avalara for your 1099 W-9, these are things you can either skip altogether or that Avalara can do and automate for you, so you won't really have to worry about.
Excellent. All right, so now I don't know that we're going to really have time to do a full-on demo, but anything, Gordon, that you'd like to just share with the group about the 1099 W-9 solution that we offer?
Yeah, I think, again, it is really just meant to be one place, one place that you're able to collect those W-9s, see what's going on, get those results, and then be able to simply transition over into the world of 1099. It's just meant to increase your compliance, but also organize and make your life much, much easier.
Nice.
So I think I've referenced it a bunch of times here, but the takeaway we hope you walk away with is: 1, make sure you collect a W-9 for everybody. 2, yes, you do have to file with the states, and so start doing that if you haven't. And 3, it really is, these are being able to make your life a little bit easier is something that, take it seriously at the moment of W-9 onboarding. Do that little bit of work on a year-round basis so that when you get to 1099 time in January, it's easy, it's quick, it's painless. And remember that having the right tools allows you to build great process. And when you have the great process, your compliance will increase through the roof and make your life a lot easier.
Excellent. Thank you, Gordon. So we have about 10 minutes left, and we really wanted to open it up for any questions that the group may have. So if you guys have questions, the best way to funnel those would be through the Q&A chat part of MS Teams. So I'm going to pause. If you have any questions, please let us know how we can help and what we can answer. I'm just going to take a quick look here. Give everyone another few seconds to post any questions. Okay, we do have a question, and that is, do I need a new TCC code each year?
Great question. Well, if you're moving, if you're moving to Iris, well, if you had a TCC code for Fire, when you move to Iris, that TCC code will no longer work. You will need to apply and get to use a TCC code that is related to Iris specifically. But if you are using a third party like Avalara, you will not need to have a TCC code. And if you want to have a TCC code, you can maintain that same one and use it going forward. You don't have to get a new code every time or every year. But again, it's really up to you in terms of if you're moving from Fire to Iris, you will need to get an Iris specific code. And then if you're going to use a third party like Avalara, you don't need a code whatsoever or to even apply. Great question.
Great. Yeah, great question. Thank you. Any other questions? We still have about 9 minutes left, and we're happy to take any questions through the chat if you guys have questions. And I'm going to share with you my contact data. If you have any questions about 1099 that we can help with, or about our 1099 W-9 solution, please reach out and let us know how we can be of service. All right. Well, again, I really appreciate everyone's time. And Nick, I don't know if you want to say any final words before we wrap up today.
I do. I just wanted to say I appreciate everybody's time likewise. And if there's anything that you needed from Crestwood, you're welcome to reach out to me as your account manager, or I will get you in touch with your appropriate account manager. And then we'll be working with you in collaboration if you needed any more information about Avalara. But that's all I had. Thank you again.
Excellent. Well, I wish everyone a great afternoon and really appreciate your time today. Thank you so much.
Take care, everyone. Bye.
Bye now.